Hello, traders from the tropical state of Indiana. It is so extremely hot in here. We're all boiling and in here. But anyways, welcome back, traders. I'm just so happy to be here with you again and do some technical analysis here with you on Thursday, July 21st. 2011. So let's get started. So check this out, guys. What do we see here today? Remember that upper area of resistance that we mentioned, that I actually mentioned to you yesterday, this upper line here pointing higher, which is here in blue. This is a significant area of resistance that we are approaching right now. We're getting closer and closer to it. And what else do we see here? As you can see, we're slowing down a little bit. We're losing that steam, getting ready for a major run one way or the other. So again, pay really close attention to that upper area of resistance right here at about 59.50. So put your little trend line in here so you can better see it when we get close to it, because if we do, things will happen. So that's for sure. But right now we're just setting ourselves up for a major move one way or the other. So pay close attention to that. And also look what happened here today. We went lower. We had lower. We hit that lower area of support that I talked to you about yesterday, the 58.30 mark, and then we bounce off of it, closing the day a little bit higher above that 58.30 mark. So that is significant, but we're still above the 8 moving average. We're still in the bullish territory, but what I don't like about the 8 moving average is that it is pointing south. It's not following that up move that we see here on our chart. It's not following it. So I do not really like this. So pay close attention to the 8 moving average as well to see if we're going to get any confirmation. And what else do we see here? The next thing is that rising wedge that we've been talking about here for quite a while. And we're still inside it. We're still trying to decide which way to go. And the rising wedge, you need to remember, is a bearish formation. So we need to wait for it to break through that lower area of support down below here, the 58.30 mark. And then we need to close outside of that rising wedge formation in terms for it to be confirmed. So that's what we're looking for, and that's what we're paying close attention to technically. And the other thing that I see here is an M formation starting to form in here. If you can see that up leg and then a little bit pullback, up run again to the upper area of resistance. We hit that 59.36 mark today, and then we pull back down. So we are beginning to form the M formation on our chart, which is another bearish formation, right together with that rising wedge. So again, the rising wedge is a bearish formation as well as the M formation that's starting to form. And what does M stand for? M as in murder. Remember, that's the key. That's the key. So remember that. Remember that little phrase. So it'll help you better in the future. But that's what you can remember about the M formation in here. So in order for the information to be confirmed, we will need to break through the low of July 14th, which was at the 56.87 mark. So it's down here, it's down below, and it's sitting right at the 50-day moving average, right here at the 56.84 mark. So we will have to break through the 56.84 mark and then close below it in terms for the M formation to be confirmed. So that's all we see here on our Q's daily chart. And check this out. Look at the MACD. The MACD is rising a little bit with a little tiny positive tick, which is confirming that little up movement that we had here. But I'm not really convinced, but things can happen. We never know. And check this out. The volume is picking up a little bit. So it's above the average. So it means that we could be building some strength in here and getting ready for a major move again, one way or the other. So, all right, so that's all I see here for today. Hope you're having a wonderful evening, and I'll see you again tomorrow.